And Matt, there's so many things we've been trying to figure out with this. Is this a supply situation? Is it a demand situation? Is it signaling bigger, badder things on the economic outlook? Yesterday, though, what we heard from API was that there was a huge drawdown in inventories, more than 10 million barrels. And maybe that eases some of the concerns about the questions of whether there's demand out there. What do you think?
In terms of the API, we've got the EIA report today. We'll likely see another draw. You do tend to see it in December. It's an ad valorem tax issue where these Gulf Coast refineries are trying to draw down their inventory so they don't have to pay tax on them. So that's one consideration. But we're also seeing strong refinery runs, and so that's using up this crude as well. We're also seeing strong exports out of the US, over 2 million barrels a day, something like that, out of the Gulf Coast there. So combination of those different factors really has caused this draw. We'll likely see a couple more coming through. It's kind of a seasonal thing, and so there's not too much to read into it from a demand perspective.
What do you think the real story is? Is this a supply picture? Is it a demand picture? It is a combination?
It's more of a supply picture than a demand side of things, simply because we're in a similar situation to where we were in late 2016, where Saudi Arabia had their pedal to the metal, essentially, in pushing out production, pushing out exports ahead of a production cut. And so that's really we've got this overhang that we're going to have to work through as we go into this next production cut in 2019.
Meaning they're producing as much as they can so that they can then say that we're going to have a production cut.
Absolutely, yeah. So they're over about 11 million barrels a day in terms of production, and so they said they're going to drop to 10.2, but that's only taking them back to where we were back in the summer. And so they did increase, really, because there was this supply gap supposedly to fill in terms of Iran, which hasn't necessarily come to fruition. But the key thing here is really that we have got into this oversupplied situation, and because of that, that's why we've seen prices come off so much.
Oil stocks in general, energy stocks, have come down pretty significantly as well as oil prices have come down. We do see ExxonMobil leading the Dow today, but what's your longer-term take about where prices are headed and then, in turn, what that means for the energy stocks?
Sure. From a speculative point of view, there's no one really to close out those long positions anymore because everyone's already got out of it. At the same time as well, in terms of the producers, they're not going to be wanting to sell and hedge their production at this level when just 2 months ago they could have hedged it next year at 74, and now we're down at 54 here. And so we're kind of forming a bit of a base here around this $50 mark here in the US. That said, the downside risk then comes from the demand side of things, with the concern relating to the broader economic headwinds that we could face.
Do you dig in deeply enough to know which energy companies did a good job of hedging when we were $20 higher than where we are right now?
Not a lot have done that at all, and even some of those more conservative ones, such as Pioneer Resources, etc., haven't actually put on as much hedging as you would have expected, or as we have seen in the past. And so that's another thing going into next year in terms of their budgeting, etc. They're really going to be under perhaps more pressure because they didn't get in and hedge much higher price.
How much faith do you put in cooperation between OPEC, its own members, and then with the Russians as well?
Well, I think it's similar to what we saw last time around, in that Saudi's going to lead the charge there. They get Russia on board as well, and they're going to do the large amount of the heavy lifting. And so as long as those guys do those cuts, then that's going to help us get that higher price coming through there. And so it doesn't necessarily mean, it doesn't necessarily matter what these other smaller producers do, because they have such a small
But you think
input.
the Saudis and the Russians will stick on this?
Yes, because they want that higher price to come through. You know, Saudi needs a budget. They have $88 to meet their budget there, and so that's one of these driving factors.
We're not going to see $88, though. Where do you think prices will kind of top out?
Next year?
Yeah.
Well, as this production cut takes hold, we should see sort of gradual support coming through. And so as long as we don't have a recession, then we should see WTI prices moving higher. US production isn't going to be as strong in terms of growth as it was this year. This year, we've seen it go from like 10 million barrels a day up to over 11.5 million barrels a day. Next year, EIA is projecting we're only going to rise perhaps 700,000 barrels a day, something like that. So there's not going to be as big an increase from the US. You have all OPEC, non-OPEC cutting back as well, and so that should help us balance the market here.